This is the Traders Exclusive Live Trader Showcase. I'm Sherry. This is the quarterly event where we feature expert traders and bring you training and insights from 20 expert traders. We have prize giveaways for everyone in attendance. We're going to do some drawings. We have some surprise interviews. Please check out tradersexclusive.com, where we regularly post articles and video clips with valuable trading tips and techniques. This is also where you're going to find the recordings for this event. And before we get started, we have to share a quick disclaimer. You know it. You should carefully consider whether trading is suitable for you in light of your circumstances, knowledge, and financial resources. You may lose all or more of your initial investment. Opinions, market data, and recommendations are subject to change at any time. Past performance is not necessarily indicative of future results. This is training. You have to do your own research, and you should always verify and research. Our next speaker is Anka Metcalf of Trade Out Loud. She's going to talk about generating an income trading only 2 hours per day, because she's a professional futures and equities trader, market analyst, and expert commentator with 20 plus years of trading experience. She must have started when she was about 8 years old. She's the founder and CEO of TradeOutLoud.com, an international swing trading education and service company. She is an expert day trader, swing trader, and active investor with a precise approach to daily income style trading and wealth generation trading, delivering results in any market environment. The strategies she teaches in her courses and her live daily approach to trading provide you with the understanding and the tools to take your trading to the next level. She personally manages her own accounts and shares her market knowledge and trades every day with her clients worldwide. She's a contributor to many financial media outlets.
Thank you so much, Sherry, and thank you, Dan, for inviting me to this amazing 3-day event that you guys are hosting. Lots of amazing information and great presenters. So definitely a wealth of information. All right, so good afternoon, everyone. Today I will be talking about how I generate my income from the futures markets in the first 2 hours, and how I assess the markets. I hope we have a little bit of time towards the end to evaluate some charts and to take a look through some charts and determine, what's in store for next week. Definitely a very interesting time in the market right now. So I'll be talking about generating an income in 2 hours, but more specifically, I'm going to focus on the technical blueprint of generating income and above average gains. I'm going to show you my stats, my results from my personal account, and this is by only trading the first 2 hours, but that doesn't necessarily mean that I trade every day. So for example, today I did not take any trades. I focused on the 4 major indices in the futures: NASDAQ, S&P, Russell, and the Dow, and I didn't see anything compelling in today's session within the first 2 hours right off the open from 9:30. So therefore today I did not take any kind of trades, but I'll show you my personal performance. And again, this month has been extraordinary for us, for me. In a very long time has that happened that I'm literally on a winning streak, massive winning streak. So therefore I have to be even more careful of how I trade. It's always a good idea to be very nimble as you're having these winning streaks, because if the market is going to be a little bit divergent, it can catch you in a very vulnerable situation where you're getting a little bit cocky because you have had all wins and you're tempted to risk a little bit more. All right, so more about that in the presentation. So for those of you that do not know me, my name is Anka Metcalf, and I'm the CEO and founder of TradeOutLoud.com. Trade Out Loud is a trading education firm that is specialized in educating individuals how to day trade, swing trade, and invest in any market and in any market condition. I personally focus on trading equities and futures. I have been doing this for 20 years. I have been specializing in trading the New York Trading Session Open and futures for about 12 years now. I come from a stock trading background, and I first started day trading for a living. And then I switched to swing trading stocks, and then obviously into day trading futures because of tax purposes. Literally, my financial planner and my CPA advised me that it would be much better for them and for me, and of course for tax purposes, to kind of divert the heaviest income activity, which is day trading futures, day trading in general, to day trading futures. I have been doing this, like I said, professionally for over 20 years. I specialize in high velocity move. A high velocity move is an inflection point on a technical chart that allows the price to follow through easily into target, because I hate being stuck in trades. I have been stuck in trades for literally at some times and at some point in time, but this is not something that you desire. So you look for these inflection points on the technical chart, and these are going to give you those really instant gratification trades. Prior to becoming a professional independent trader, I come with 10 plus years in investment banking, and I'm the designer of an institutional proprietary trading system that is based on price support resistance, but there's a catch. I focus on confluence zones within these price support resistance, and I follow, teach, and trade with 8 layers of price support resistance, because if you're just focusing on supply demand, you're missing the rest of the 80% or 90% of the equation, and you're missing trades out. You're missing trades that have the capability of developing into really phenomenal trend following trades. I focus on specific time frames because I have been trading for so long. I have developed specific time frames for my specific trigger times for specific time frames that I use at the open, and definitely also throughout the day. And this is specific for day trading. They work for day trading stocks, and they work for day trading futures. And in fact, this is something that I have developed for my own day trading when I was trading stocks, and I have implemented with gigantic success into the futures market, and it works even better in the futures market than it literally does into the stock market. The stock market, it works as well, but and especially in the ETFs, if you're trading the Qs, the SPYs, diamonds, these trigger times work really well. And also there are specific price zones. These are not, and that's the reason why I'm the designer. I cannot take credit for them because they were taught to me, and I'm teaching them myself. They were taught to me by my mentor. And these are specific price zones throughout charts where institutional traders scale in and scale up, because as you know, they're not going to be trading like 5 contracts or 10 or 11 or 20 or 1, for example, in some cases. You like retail traders, so they need to take thousands and tens of thousands of contracts, so they cannot take them both. They cannot take them all at the same time. Therefore, they need to scale in and to scale out into targets. So these are 4 specific price points. These are the best kept secret of institutional traders. And these are, again, really great in determining targets, in determining entries, in determining trail stops, etc. And of course, chart synchronicity and divergency is very important. It's basically a relative strength, relative weakness kind of comparison in between charts, because I got this from day trading, from the time when I was day trading stocks. Because what is the one thing that you do before you start trading? Tesla or Apple or Intel or Microsoft, whatever you're trading as a day trading as a stock trader. The one thing that you do is, first off, you look under the hood. You look at the market internals, and you try to determine the relative strength and the weakness. So you're trying to determine and say, how are the Qs behaving in comparison to the SPYs, and how is Russell behaving in comparison to the Dow? And what is the Dow, let's say, in comparison with the Qs, for example? So the diamonds, right? So you're always getting a feel of the leader and laggard within the indices, because they're not all created equal. For example, you have the Qs where you have 100 stocks under the name, under the index. You have the S&P 500 where you have 500 stocks. It's a broader representation of the market, a broader representation of what's happening throughout the market. And then you have the Dow, you have only 30 stocks. And then you have Russell, you have the small caps, you have 2,000. So there are a lot of contributors. So for example, if NASDAQ is going to have strong semiconductor sector, a strong technical sector. So what do you think NASDAQ is going to be doing? Whether you're trading the Qs or the mini NASDAQ is just going to power higher. And oftentimes you're going to see sector rotations into the market, and these sector rotations are the ones that are pushing the markets up or down, and especially these indices. And the reason why I'm telling you all this before we even dive into the materials, because this is a very important element before you start anything that you're doing, any kind of day trading activity, because it's very important whether you're a stock trader, especially if you're a stock trader, you need to determine the relative strength or weakness of one index and focus on that specific index, that ETF, and the stocks that are under it. And then you've got to scan through those stocks. It sounds complicated, but it's something that is done within a minute, maybe less than a minute. You determine the top 5 winners and you go with those. So those are going to be your selection criteria. That's how you scan. And in the futures market, definitely, if you see like a strong sector, for example, we have been seeing an outperformance in NASDAQ because we have semiconductors that were strong. We had the tech stocks that were incredibly strong as well. So that builds up the momentum into it. And one other thing before we dive into the material, because there are so many things that are outside of this material, right, that are happening right now into the market. And next week, we may have a potential window dressing. We're seeing that even today. The price action is holding pretty robust, and it's not giving up, even though it's a Friday. So there's no sell-off into the end of the day. And this is going to be conducive for next week. Why next week? Because it's the end of the quarter. You got to write this down. And every time at the end of the quarter, you can expect window dressing. So what is window dressing? You're going to ask, for those of you that don't know what window dressing is. It is the phenomenon that where portfolio managers are ditching the stocks that were underperformers. Remember, we talked about underperformers. So for example, stocks like 3M, stocks like Johnson & Johnson, stocks that are weak. For example, CVX, or I don't know, something financials, let's say. So they're going to get rid of these names. So careful here, because you don't go long bottom picking in window dressing, especially in window dressing, because these stocks that are low today and that have been weak throughout this past quarter, not only month, but quarter, they will drop even more. Don't think that they're going to abandon them. No, they're just ditching the stocks so they can hop in high-flying stocks like Meta or Microsoft or I don't know, maybe Apple. Okay, so these are the type of stocks where you can see a continuation higher going into next week. And especially this is a phenomenon that is present, especially in the last 3 days of the quarter. All right, so that was a little parentheses, because I think it's very important for you guys to understand in what environment we're going to be trading next week. So next week, if the market holds, still tech sector, semiconductor sector is still robust, is still a little bit, still stronger. So you can expect a little bit of a pop-up. If there's not going to be any kind of black swan, so I read some articles this morning. Anyways, so here's what I'm going to be talking to you guys today. The basics, what you think you knew, but you really don't. I didn't know them as well, so I'm going to be sharing them with you. How to pre-plan your trade before the New York trading session open. How to select your trade. Remember, we were talking about divergence. We were talking about how to select. So if you're a futures trader, what do? Are you into the zombie factor where you say closing your eyes, closing your brain out, shutting down everything? You're going like, I'm an mini S&P player. Okay, that's all I do, mini S&P. Well, newsflash. Sector rotations are real, and they're happening on a weekly basis. They're sometimes happening on a daily basis. They're happening on a monthly basis, on a quarterly basis. Don't you want to trade something that is in play that day or something that is in play that week that has the power to follow through to target easier and not kind of like have that zombified brain where you say, oh, I'm only trading M&E S&P. Well, I'm going to share with you that secret. And of course, what time frames to focus on when trading the open. So this presentation is for you guys. The fact that you're here, it shows that you have a determination to learn how it's done the right way. So this presentation is for traders that want to achieve above average gains, power trading the futures market. And again, you have lots of advantages trading the futures market. You just, just Google it, advantages of the futures market, and you're going to get hundreds and thousands and millions of pages with the advantages of trading futures. And that's one of the reasons after a 20+ career trading stocks, I shifted about 12 years ago into trading full-time day trading futures. And by full-time, I mean 2 hours or less. I only focus on 4 charts mainly for my day trading activity. Rarely that I look for opportunities in gold and oil, and that is because the market has been very volatile. It has not always been the case, but within the last couple of years, things have been very volatile for these 2 commodities. Do I swing trade? The answer is yes, I do swing trade, and I'm looking for opportunities in bonds. I'm looking for opportunities in other metals like copper or natural gas. I'm looking through agricultural products like wheat and corn and what have you. So the system that I trade on is based on a stress-free environment. Why? Well, first of all, the orders are placed, there are limit orders. So we know well in advance where the entries are, where the stops are, where the targets are. And based on the activity of that specific index, we know pretty much how we're going to trail it. We actually teach 3 trailing strategies within our courses. So while we all here because we love money, and don't be afraid to say it, I love money and I love my money. Other than that, I would not be in this business, because if you have a job, you're limited to your your income. You can't grow outside of your income. Even if you get a bonus, well, what's that? 1%, 2%, 3%, whatever it is just a little bonus. It's not going to help you get anywhere. You're literally into a ceiling. You can't break through. And one of the reasons why I wanted to give up my job and get started into day trading, swing trading, investing. I have been an investor for over 30 years, swing trader as well. But I have just adapted 20 years ago. I gave up my job and I said, I got to make this work. So we desire financial freedom. And because we desire financial freedom, we try to look for ways to supplement our income or generate income because we want to make more money. Why? Well, just look outside. Inflation, recession looming. There was an article today, I think it was on Seeking Alpha, about a possible black swan event, right? So that's not much fun, right? For people and individuals that rely on their salaries. But for us as traders, we're going to be thriving because black swan events are incredibly profitable, okay? So in reality, when you're looking at your account size, because you have been dabbing with trading, probably, some of you guys, trial and error. That's how everybody's starting out, right? Trial and error. For me, it was a little bit different because I knew I wanted to give up my job. I had it on my vision board to give up my job because I hated the commute time. It was taking me about 3 hours a day, 3 to 4 hours a day, an hour and a half to go to work, an hour and a half to go back. And that is without really heavy traffic. Okay, when it was like heavy traffic, it was about 4 hours. Now I trade less than 2 hours. So that was my goal, and I was very determined. So I did my homework while I was at my job still working. I took tons of classes, and that was a long time ago where nothing was really online. You had to travel to different locations to get your education. So yes, that's what I did because I understood that I really needed to find someone that can teach me how to do it to save time so I can quit my job and start producing. So the reality is that you need to look at your account size right now and determine and say, hey, do I love my money or not? Because if you're forcing trades, it means that you're not loving your money. You're going like, oh, I'm just going to risk $100 to see what happens. That $100, guys, has a lot of value. Okay, so don't risk it recklessly. You have to make sure that that is a really good trade, that is a reliable trade, it has really good technicals, You're respecting your trading plan, which is so important. Take it from me. My mentor told me, yes, you need to have a trading plan. Write it down, write it down, write it down. What did I do? For a couple of months, I lied. And I said, yeah, I do have a trading plan. Yeah, it's written down all right. And I was like, I've got this like trading plan. Are you kidding me? It's right in my head. No, you need a written down trading plan, because every single time when you get in front of the computer, it needs to be on your desk and you need to read it, not in a drawer. You need to read it and say, I'm going to wait for this strategy and this strategy alone. I'm going to be trading from this hour to this hour, and I'm going to respecting this rule. So for example, I need the price above the 20 simple moving average, or I need the price above support in order to buy it. I need a technical rotation from, let's say, for a buy setup from red to green. I need the parameters to be the same. I need to see the tradable void. And once you have this in front of you, there's no way you can make any mistakes into the market. Trust me, tried it without a trading plan, and then I had my trading plan right out. And it doesn't have to be a novel, because a lot of times traders make it a novel. No, mine was just a couple of sentences, period. That's it. And then based on my trading plan, I started noticing things into the market. So for example, I started noticing that if I took trades at different times, they would trigger and then fail. Now, how many times has that happened to you guys? I mean, to me, it used to happen almost on a daily basis, and I was getting very frustrated until I put the research on it and I started to document it. And then I realized that, hey, there are some areas and some timings into the market where these things don't happen. So I started tracking when they work and when they don't work. So that's how I determine some trigger times into the market. And I'm going to be sharing them with you today. So in order to make more money, you need to become a master trader. And you're going to go like, why do I need to be a master trader? Because if you're an average trader, you're going to get literally run over. If you're going to be like a so-and-so trader, you're going to have only stops. And the risk for that is that you're going to be killing your capital. You're going to get frustrated, blow up your account, give up. That is option number one. Or you're going to put more money into trading, and then guess what? You're going to fund your addiction to the market. That's pretty much it. You need to become a master trader, because everybody on Wall Street is a master trader. You're trading with or against hedge funds, portfolio managers, algorithms. So you better smarten up, get serious about learning how to trade, because you're trading either with the big guys, with the suits, or against them. I don't know about you, but I want to be with the suits. And I want to be in sync with them. I don't want to chase them, because a lot of times you're going to see traders that are following institutional moves. What happens when you follow someone? When you follow someone, you're behind someone, right? You're following that person, or you're following a dog, you're following something. You're behind it, right? Or when you chase someone, you're running after someone. You hear the expression, never chase a trade, right? Because what happens? Price is running and you're going after it. You don't know if that area where the price is at is the top or not, right? And oftentimes, like 90% of the time, traders run after price and then they get run over. You don't want to do that. So you need to become really good at what you're doing, because if you're here, it shows you, not me, that you're determined to learn. And this is amazing, because you're in the right place. Not only that, but you're determined and you know that there's something to it. And you want to improve on the baggage of information that you already have. So in order to become a master trader, which comes with confidence. Now, confidence, in order to have confidence, right, you need to have knowledge, because you cannot be confident if you don't have the market knowledge, if you don't know what to expect from the market. You got to be accurate, because entries are entries and we're not in a blurry area. My entries are to the T, to the price, to the penny, and they're not like a penny up or a penny down. They're strict to the penny. Same goes with the stops. The entry and the stop is the most important parameter of the two most important parameters of the trade. Why? Because first of all, the entry is the one place where your capital is at risk. Second of all, when you have the stop, you can evaluate the difference between the entry and the stop, And then you can position size and see how many contracts you could take the trade with. This concept is mind-blowing, simple, but yet 99% of the traders in the futures market do not respect it, and they get run over. Okay, they get run over, they get killed into the market. You know, they're liquidity providers. They're the ones that are providing liquidity for the algos, for us, for anybody that knows how to trade and know these simple rules. It's all about simple rules. Don't think that it's something sophisticated. It's all about simple rules. You need to be disciplined. Why? So for example, today I started the session telling you guys that I didn't take a trade. That's discipline. I didn't see the market environment optimum for my style of trading. So therefore, I did not take a trade. Do I regret it? Absolutely not, because the market is still chop in the total chop fest. And you have to be patient. Wait until the pattern forms. Oftentimes, for example, if you have a pattern that is specialized, like I trade, for example, at the open, you may not have a trade at the open, and you may have to wait, I don't know, a couple hours or a few hours until the market calibrates, and it offers you that setup that is worth taking. So if you have like a junky, if you have junky action, for example, in the morning, and if you have time and want to trade in the afternoon, just wait it out. It'll pay for patience. And I mean patience with a Y, like patience. You got to be in control. And when you have all the factors for the equation in, and when you know what you need to do, you're in definite control, because you know, this is my entry, this is my stop, this is my target. I know how to trail it. A really good trader is a trader that knows how to manage the position into targets. It's really easy to call trades. You can learn that in probably a couple hours. However, staying in trades, carrying the trade into targets, and then further higher if it goes, or lower, depending on whether you're taking it long or short, is an art. It's the art of trailing. You have to be very knowledgeable when you trade, because you have to be aware of what's happening every single time in the market. So for example, you're not going to get into a trade long or short just before a FOMC meeting, right? Because that is literally a lottery. If you want to play lottery, just go to a casino. It's not the place in the market, and we're going back to loving your money, okay? So every single time when you place a trade, just ask yourself, do I love my, let's say, if your position is $100 per trade, ask, do I really love my $100? Do I really want to, you know, kind of risk it right now? And you're going to see that you're going to get a totally different result when you ask yourself that. And also, trading is stress-free. So if you feel tense when you're trading, there are a couple of reasons why, but one of the most important reasons why you're feeling tense and why you're feeling like stress is because oftentimes you have too much size on your hands. You can't stand the heat, right? You can't stand the heat. So you know what they say, if you can't stand the heat, don't stay in the kitchen. Just take your size down a notch, okay? And there are many, many other reasons why you feel stressed. First of all, like I said, it's the fact that you're allocating too much size. The other thing is not calculating the parameters of your trade, and you're just winging it. You're not waiting for the appropriate entry, for a trigger point. All right, so you need to know when to trade and when to sit on your hands, especially in this market environment, which is a day-by-day environment. And you need to know how to trade, There's so much material out there. You know, you can browse, I know, and there's good material, there's bad material. So you have to sift through a lot of material. That makes sense. But you need to know and learn how to trade. Don't learn with your own cash. Okay, don't learn with your cash. Learn how it's done and then apply it. And you need to know how to handle market conditions. I was talking earlier about market conditions, about FOMC. We were talking about, you know, other economic events. For example, there's a bunch of economic events that are coming in at 8:30. Today we had data coming in at 9:45. Usually that's on a Friday. You have, I don't know, if you're trading oil, you have the Baker Hughes oil rig count at 1 o'clock, right? So you have a lot of things. So you have to know exactly that is the timing that you're going to have a really big impact into the market. All right, so trading is a system. I was talking to you guys and telling you that trading is a pure system. It's not about, finding entries or having good management skills. It's the whole thing. It's the whole thing. You need to analyze. You need to know how to analyze charts. You need to know how to do a top-down analysis. You need to know technical analysis. You need to know the cycles of the market, which are very important. And which cycle are we right now? Are we into an indecision cycle? Are we into a trending cycle? Are we into a tentativeness cycle? Are we into a fear cycle? Where are we? And based on the cycle, you adapt different strategies that you deploy. So for example, in a greed cycle, you're only going to look for breakouts and pullback buys because the price action is going to get drawn to the upside. In a fear cycle, you look to short because the price action is going to go lower much faster because of the traction to the downside and the bear aspect of it. You have to find high odds trades. What are high odds trades? In a trending market, you have to obey the trend. Why would you go against the trend? And I know a lot of traders that are doing this, they're going like, oh, it popped so much, it went up, I don't know how much, I'm gonna short it, I'm gonna short it, I'm gonna short it. It's like they get this satisfaction from it and they get killed because the price action has a reason why it topped into where it, or trading into the highs. And oftentimes it's doing a really shallow pullback and then it's again, rip your face rally once again, right? So don't get really complacent into the market. Don't try to go against the institutional trades and wait for a setup. No setup, no trade. It's as easy as that. Learn a handful of strategies. In fact, you can make money in the market with only 2 strategies. Let's say a pullback buy or sell and a breakout and a breakdown. These are the most basic strategies that you can find and you can make a lot of money with them. And in fact, these 2 strategies are deployed almost 90% of the time in the market. There are a lot of algorithms that are programmed to react off of these as well. Then you have to have a really fine and precise execution, flawless execution. You need to gauge an advanced price action. The price action is whispering and the charts are always whispering where they want to line up with the buy. And if the buy triggers, you know exactly where the stop is going to be. You know ahead of time where the targets are going to be. So your execution has to be flawless. Money management skill is an absolute must. We talked about this. And of course, patience again. So why are we all here? Because we want money. And number one objective, my objective was when I quit my job was to create income and to increase my wealth because I knew like and by the way, I was working in the financial field. So I had the dream job. And I was working at a boutique investment firm. We had a hedge fund and we were working with only really, 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 really high net worth clients. Okay. So the reason why I wanted to quit my job is because I wanted to be that really high net worth, but not client, because I wanted to manage my own money because I saw the potential to do it and how to multiply it. Plus, if you have your money that is managed through someone else, you pay a lot of fees and commissions and all that stuff. All right, so time and money efficiency with futures. I'm going to give you some examples right here that are literally going to blow your mind. So let's say, for example, let's take 2 trades side by side, and we're going to get into charts right away. So let's talk about futures versus stocks, right? So first of all, just let's say we want to buy the Qs. Right? Everybody knows the Qs, the ETF, we want to buy the Qs. Let's say the Qs is trading at $300. And in order for you to buy 100 shares, you need about $16,000 in buying power, and you need an account of at least $30,000. Why? Because you have the day trading pattern rule. So what that means is that you can open an account with $25,000, but you need to maintain $25,000 at all times. So chances are if you're opening the account, executing a trade, and if you lost one penny, your day trading status is out the door. Everything's automated. So your day trading status is out the door. So you cannot day trade anymore. So that's why you need to open an account with at least $30,000, right? So it gives you a little bit of wiggle room. And if the price, let's say in a chart moves for, let's say 50 cents, you're gonna make $50 because for each cent, you make $1. Now, On the other side, if you want to buy, let's say NASDAQ futures, which is priced, let's say at 15,000, the trader needs about $17,000 in order to buy a contract. That's the buying power in effect. And if the price goes up 50 points, then you would profit $1,000 because each point is $20. But let me show you something that is literally going to blow your mind. This is a chart, and we did this experiment last month. All right, you can see it right here, February 15, 2023. This is a chart of the Qs. You can see back down here on the bottom right-hand side, the buying power in effect, just roughly $16,000, $15,483. Now, we took 100 shares of this because we wanted to use the same kind of buying power to see how much money we can make, right? And I often gave this example, and usually I give this example every year, and I have been doing this since 2016 when we came up with the futures and with the futures course and with the futures trading room. And that is because I wanted to show traders the potential you can have. And this is something that I didn't always know, I didn't always do, but it was shown to me by my CPA, right? It said, hey, you're paying too many taxes, okay? You could do something about it, okay? Pay less taxes. I'm like, sign me up. By the way, the IRS needs to send me some money. And since last year, by the way, and it's so ridiculous that I'm not getting my refund, and it is a really big refund. And I don't know, they don't have the money. That's really bizarre because it's been over a year. Okay, so what I'm about to show you here is the phenomenal move that we had. By the way, this is the entry that we have used. This is a pullback with the timing. It's 1 o'clock. This is one of the key times that we focused on as well if you would decide to trade the afternoon. And this trade into the close, $300, $303. Now you would say, yeah, that's a perfect trade. It's great. You made $300. That's perfect. What if I show you that from so this is from 1 o'clock into the end of the day at 4, right? Well, let me show you how much money you can make with NASDAQ futures using the same strategy. Here it is. This is the buy right here. I don't know where the arrow disappeared, but this is the buy right here. You see my cursor. Okay, this is the stop over here just below the pivot. Give it a little bit of wiggle room. It's always a great idea to give a little bit of more wiggle room into the stops, especially in volatile markets. Remember this. And if this is the only takeaway from this class, just write this down. Small stops equal small profits. Bigger stops equal big profits. Okay, so keep that. And that's also something for the time frame. So if you're a 1-minute trader, small stop, small profit. 15-minute chart, bigger stop, bigger profit. So I don't know which one you guys want to do. Multiple stops on the smaller time frame, almost less than three-quarters of the stops on the highest time frame. All right, so here we are, entry and into the end of the day with one contract, buying power in effect, $17,000, $2,480. So I'm going to ask you right now, so would you rather be in the Qs? I mean, this is a really good trade, but I don't know. I don't know. I'm just saying, like, if I have $30,000 right now, would I really trade the Qs or would I trade NASDAQ? I think the answer is obvious, but I got to tell you something else. Wait, there's more. What? Yes, there's the there's the micro NASDAQ. What is a micro? Micro is 1/10 of the size of full size contract. That's what it is. So they came up with that, I think it was in 2019, right after the 2018 volatility, where everybody lost their shirts. And people were not opening accounts anymore because everybody lost their shirts in 2018. So the CME decided to come up with this thing called the micro. That was a really good decision because traders were flocking back into the futures market, and that was good, more liquidity. So I'm going to share with you this. This is the same entry. This is the exit into the end of the day, $246. But look at the buying power in effect, $1,700. Wow. Now let's go back. $300 in the queues with 15,000. Boom. With $1,700, $246. Oh, are you kidding me? But wait, there's more. This is the spice, right? You need about $20,000 in buying power and effect. Price went up. Same strategy, by the way. Same strategy. Do you see any difference in the charts? So you're still trading the same charts. You're still trading the same patterns, but you're getting maximum efficiency from your buying power. All right, entry. This is the entry right here, running into the close, $262. This is really good, right? Trade work, follow through, awesome. All right, this is the mini S&P. Just ignore this amount right here. The entry was the same, was about 41.36 right here. This was a trade that I had on and I added to, okay? So bottom line, $3,600 on the day, $3,600 on the day with one contract. Now, you have the micro available. That's $1,100 in buying power. Same entry into the end of the day, follow through, $127.50. Okay? So first of all, why do we need to learn how to trade? Guys, inflation, recession looming. You want to be financially independent. There are tons of layoffs. If you still have a job, that's not a guarantee that you're not going to get laid off. Look, I'm in beautiful Boca Raton right now, but I lived through the 2008 recession in Detroit, Michigan. It was a really sad place to be, especially in the Detroit area. We still have a house there. We go there in the summer. But it was a really sad place to be. 1 out of 2 houses in my neighborhood, in my community, was in foreclosure. I'm dead serious about it. Remember when GM went down, everything went down, Chrysler went down. It was really sad, and there were like massive layoffs, okay? So you don't want to be in that situation. It's kind of like what it was in the pandemic. Some people lost their jobs. They were waiting on stimulus checks. Well, we were thriving into the market. We didn't even know, like, pandemic, what? Like, for us, it was just another day. We didn't feel it, but we thrived. It was sad, but we thrived. Okay, so we helped ourselves. So whether you want to pay, your mortgage off, your credit cards, your student loans, etc., right? Trading is the way to be. And I don't care whether you're looking at futures or you're looking at options, you're looking at stocks, you're looking at day trading or swing trading, whatever style it is that you guys feel comfortable with. Just look outside of the box. Trading is the place to be, and literally. So here's what I focus on, and this is literally a trading plan in a slide. First of all, it's very important to understand the market timing. I don't trade, even though the futures market is open 24 hours, or close to 24 hours a day, 6 days a week. I don't trade that much. I only trade the first 2 hours, and I wait until the New York trading session opens. I love the volume, and I have strategies designed, tailored for the open. I have strategies designed for 9:32, for 9:35, for 9:45, for 10 o'clock, for 10:30, for 11:15. Okay, so market timing is very important. 9:30, the market opens. There's going to be a reactionary area at 10 o'clock, and then there's another reactionary area at 10:30. You have to be very careful with these times because these are the times when setups occur. And these setups have the potential of not stopping you out as often, okay, which means higher probability in your trades. The time frames that I focus on, from the moment the market opens into about 10 o'clock or so, close to 10 o'clock, not really into 10 o'clock, I use the 2-minute charts. So I focus on strategies on the 2 minutes. Then I shift to the 5-minute because I want to cut the noise. I don't want to see the noise. So I want to focus more on a higher time frame. Why? Because when I'm getting into 10 o'clock, when I'm getting closer to 10 o'clock, I shift into the 5-minute chart. Remember, a little bit wider stops, right? Bigger profits. So that's what I'm looking at. And then throughout the doldrum period from 11:30 to about 2 o'clock, it's always best to focus on the 15-minute. It works for me. It works for everybody else on Wall Street, so it should be working for you. A lot of shakeouts are happening around that time. So you want to stay away from the noise, cut the noise, focus more on the more reliable pattern. And in some cases, I even go to the 30-minute or the 1 hour, depends on the chop. And patterns that I use, mostly, like I said, I think 90% of the time I use the pullback buy or the pullback sell, whether in an uptrend or in a downtrend, or the breakout or the breakdown. And now what I'm about to share with you is literally proprietary right here, okay? So these are execution times, 9:35, 9:45, 10 o'clock, and 10:30. These are the most precious times in the market where you can execute trades based on the strategy, the buy-sell strategy, the buy or the sell strategy, breakout or the breakdown. They start working at around these times if you're trading the first 2 hours in the morning. And what's very important is that you have to measure and determine the ESTRP. What is the ESTRP? Is the entry, is the only time where you put your capital at risk. It is the stop based on which you calculate what? Your position size. It is the target, right? All right, so I was mentioning earlier about these triggered times and about how the market timing. When the market opens at 9:30 and it shoots up immediately, watch for a shallow pullback. If you don't have strategies, really find precise strategies to act here. And by the way, this is my preferred time. But if you don't have fine precise strategies over here, wait for 10:30, because at 10:30, if you're getting a shallow pullback, if you're not retesting the 10 a.m. low, it means that the price action is ready to go higher, right? The price action is ready to go higher. And I don't know if I can share a screen right now. Let me see if I can pull it up here. Not sure if you guys are going to see it or not. Let me try this. All right. I don't know if you guys can see it, but I'm going to show you, like, this is the 10 a.m. low. This is the higher low. This is the 10 a.m. low. This is the higher low. That's why the price is punching higher. This is the 10 a.m. low. It's kind of like a base. And this is, let me just put it right here. I hope you guys can see it. All right. This is the 10 a.m. low. This is the higher low. Boom, higher. This is exactly what I'm talking about. Okay. So the preparation work is very important. Before you get into charts, you have to make sure that you check your economic releases, check earnings, especially in earnings season. Now we're winding down of earnings season. We have 1 week and then we're done. And then we have a brand new earnings season that starts very soon, April 14th. You got to determine your pre-market game plan based upon relative strength and weakness into the market, based upon what you guys are seeing from multiple time frames. You got to zoom in on the index or the stocks that you guys may be deciding to trade and zoom in on that technical pattern. Find out the key inflection points, pay very close attention to the timing of the market. And remember, I was discussing the 9 o'clock, 9:35, 9:45, 10 o'clock, 10:30. These are very important trigger times into the market. And of course, determine your game plan for that trade, what strategy you're going to be applying. Now, earnings season is very important. We're somewhere like in the zero factor over here because we're just winding down. We're just closing a quarter, and it has been a very turbulent quarter, but it has been a very profitable quarter for some. And we're really looking forward. So now you have to focus more on specialty trades. Why? Because you don't have the power of the fundamentals on your side. So I want to recap a little bit the day trading time frame. So if you're really new to trading, focus more on the 1 minute, because not all time frames. I find that a lot of traders, ask me, it's like, what's your preferred time frame? And that's a legit question, but it's not a great question because it shows that that trader doesn't know anything about the market. The market moves in segments. The market is so much faster in the morning than it is into the afternoon, and then it is into the end of the day. Just to get an idea, whatever moves in the morning from, let's say, in a couple hours in the morning, has a tendency to continue in the afternoon or take the opposite direction because you're getting the same kind of influx of volume, but the volume really winds down within the doldrum period. So for that reason, when the market is fast, you always can look for opportunities on the 1 minute and the 2 minute. And as the time progresses, look and slows down a little bit, because obviously after 10:30, the market slows down. And it's getting ready for the doldrum, but that's still a super sweet spot to find trades. Look towards the 5 minute or the 15 minute. Now, if you want to learn how to trade and find winning trades, roll up your sleeves and learn how to trade. Now, we do teach and trade live every single day a highly successful technical system that trades in sync with the institutional money flow in the first 2 hours and enables us to profit on momentum moves at specific times, locations, and precise technical patterns. Our method overrides any kind of news event because we don't trade the news, we trade the effects of the news. It overrides any kind of artificial indicator because, and I've heard somebody say here before me, they clutter and they confuse you on the charts. So the less indicators you have, the better it is. You focus on earnings because that's the fundamental move, but you trade the effect of earnings. And of course, it overrides dark pools as well. So trading is like learning how to drive. It could really be overwhelming. You have to keep track of the gas, the brakes, the mirrors. Why? So you don't crash. But once you get used to it all, you don't have to worry about anything. And your only concern is getting to your destination. Everything becomes second nature. So I'm going to ask you guys, so when you get in a car right now, do you really start adjusting everything and looking, you know, like check, seatbelt, check, this, check? No, you just get in and you go like, okay, where am I going? The same thing is with training. You have to keep track of your entry. Your entry is your gas pedal. That's the time when you commit, right, to the trade. Your stop is your brake, right? That is your emergency brake. So you don't produce damage to your capital. You don't produce damage. You put a brake, you see something crossing, you know, the road, what do? You hit the brakes, right? Why? To alleviate any kind of damage, not to produce any kind of damage. And of course, you have to pay attention to the market conditions, right? And of course, take profit, because that's what trading is all about, chunking it in. So once you get used to it all, everything becomes instinctive. So wouldn't it be helpful to have someone that can teach you all this? And we do have a live trading room where that I run every single day. I'm going to show you the stats into that trading room. The monthly membership fee is $299, and we have an annual for $2,990, where basically you get 2 months off. The price is going to increase, and it's going to increase very soon. So what we do in the trading room is basically 100% real life trading. So we do 100% guided trading. So if you're new to trading and you need extra help guiding you through the trades, we're providing you with that kind of information. So we're teaching, I'm not teaching in the class. We have a class that does that, but what you're gonna learn is where I enter the trades, where I place the stops, how I trail live on the mic, because like I said, trailing is an art, okay? A lot of traders out there, you know, just call trades. I could call 20 trades. I could call trades right now, at least 5 trades right now. But the most important thing is how you trail the trade, okay? Because anybody can call a trade. Very few, very, very few can actually manage the trade in real live conditions. I take between 1 and 3 trades a day. I use exact parameters, entry, stops, targets. I also have a live screen share, and we talk about market conditions. We talk about the analysis, and basically what we start with is the pre-market game plan. That's how we start. We start with economic releases. We start with the pre-market game plan. We determine our institutional levels, and then we wait for a trade to line up. That's what we do, okay? So if you're interested, you can go to tradeoutloud.com, go under services, and I'm going to show you also what you're going to be getting. So when you sign up, you're going to receive a welcome email which is going to be a really long email. Don't look just at the login, okay? Just read the whole email. It's a really long email, but it actually introduces you to the system, okay? So by the way, we do have a track record. If you go to our website, we have a track record since the room started in 2017. Transparent. You can see all the trades, just like you could see it here. This is the January stat. You can see we were up. And by the way, the results are per contract, right? This is the February stats. This is per contract. This is March. March is gigantic, guys. March is gigantic. We had a gold long from 1857, and we have still gold long from 1831. We scaled out at 2000. We scaled out at 2000, but we're still in the trade. We're still in a trail position in it. And that's a swing trade, by the way. This is swing. This is swing at 1931. Oh my goodness. Are you kidding me? Okay. So this is going to be a gigantic month. Also, you're going to have access to my trades. Okay. To my, I don't know where March went. What? Where did March go? Aw. All right. I wanted to show you 100% winning trades in March. Aw. This is so sad. I don't know where it went.
Hit Control Z. Control Z might get it back for you.
Really? No, I'm not. Yeah, I don't know where it went, but I'm not going to bother right now. So you guys can email me, so I will send you the results. Thanks so much, Sherry. You have risk management. Remember I was telling you guys about position sizing, how important it is? Oh my gosh. Position sizing is a must. Not only that, you're going to get the risk management over here. This is for micros, whatever a point is, whatever a tick is. If you have a $250 risk, for example, for the trade, and if you have, let's say, a 9-point S&P stop, can you take the trade? The answer is absolutely no. But we go a step further, and by the way, you have all the instruments over here. We went to risk calculator. We're going to provide you with a risk calculator. So what that means is that, for example, if you have, let's say, a $500 risk per trade, oops, $500. Okay, $500 risk per trade. And if you have a stop, for example, in ES of, I don't know, let's say 5 points, you can take it with 2 contracts, okay? Or you can take it with, I don't know, 20 micros, okay? So for example, if you have, let's say ES, and if you have like a 15-point stop, 0 contract, so you're not going to be trading the full size contract, but if you go to the micro section, you can see that you could still take it with 6 micros, okay? So we provide you that. You have rules, we have guidelines for the trades with the stops, soft stops, management, exits, cancel trades, etc. We offer funding for traders. We provide you with the roll dates, option expiration calendar. We provide you layouts for Thinkorswim platform and Ninja Trader. These are the most popular amongst traders. Charting as well. And by the way, we really don't have a lot of time left. But anyways, that is, TrendSpider, and we provide layout for that as well. This is, by the way, this is NASDAQ right here. So what do you think it's going to do? It's trading into a lot of resistance. It's the most relative strength index. On Monday, Tuesday, sometime next week, if it pops above 13,000, boom, up it goes. If it trades below 650, down it goes. So I guess my time is up. Thanks so much, Sherry, for having me, and thank you so much, everybody.
Anka,
I'm looking forward to trading with you on Monday.
I appreciate you being here. Now, was it the futures trading that you needed? I want to put the link in the chat.
Okay, just put tradeoutloud.com. Yes, that's fine. Okay. And you guys could go under the service tab and just click futures trading. I don't have for some reason, I don't know where my link went.
Oh, because I have a link that you sent me on your form.
I do? Perfect.
Yeah. Yep. Okay, so I did it. It's futures-day trading, day-trading.
Perfect.
So I just put it in the chat for everybody. Hey, we have one question.
That disappeared on my slides today.
I know the feeling. It's weird things have been happening since like November. Tammy would like to know, What does it require to participate in TOL funding?
Okay, you'll find all the information on the home page. So if you go to the home page and then click on any other options for funding, it's going to take you to the bottom of the page where you have 2 huge videos. Watch those videos and we answer all the questions in there.
Wait. All right, there we go. Thank you so much.
Thank you, Sherry. Thanks, guys. Have a great weekend.
You too. Have a great day. Bye-bye.
Bye.
All right, everybody. That was Anka Metcalf with Trade Out Loud. And she's made you a wonderful offer there that you ought to go take a look at.